Good morning, all. CamelbackTrading.org coming to this Friday morning, August 19th. We're looking at Window Trader's market profile of the ES and SPY for the moment. So the bears are trying to come out of an inside day in all three of our indices to the downside on a fairly decent sized gap. Remember, we all had inside days yesterday. We were basically balanced on the daily, right? We were, for a short period of time, up in all three indices for the first time this year in the S&P. Then we came into balance, and now we're looking to come out of balance to the downside. It's just like turning a huge tanker ship around. It's baby steps. First they go into balance, right? You're going to have to come into balance first, come out of balance to the downside if you're a bear on the daily. Then and only then can you start concentrating on the weekly and monthly at some point. It is an expiration today. We'll see if this gap holds. Remember, there's huge gaps below us also. But for now, the key thing is what I've been talking about how for weeks is May's high, right? If the S&P does not capture May's high and get above it with acceptance, we said both the Qs and the Russells should roll over also. So it's going to be interesting to see if the bull's run is over. I will not call that just yet, right? Just because the daily's down. Things will start definitely changing if we start taking out any weekly lows. We'll recap everything on the charts tonight. Right now, the overnight high in SPY is 428. Overnight low is 423.22. Now, we're looking to have a gap right now of about $1.75. Again, everybody on social media will be screaming gap rules apply. Gap rules apply to me if the gap's going to be about $1 or less, so it's a better risk reward short. We are coming out of an inside day, so you go with it and monitor it for continuation and, just as importantly, lack of. So what does that mean? Well, if we are opening to the downside of an inside day, you should be looking for shorts. I'm not saying if we gap lower by $4 to jump on a short right away, but any kind of attempt at a rally or whatever, especially if we start one-time framing down, will mean that you should be looking for shorts until that one-time framing down, until if we have single prints, until things of that nature would stop. Now, let's just go to the other ones real quick before we go to a game plan. Triple Q's also looking to gap lower. Now, remember, Q's had gone down on the daily on the 17th. You could have still called it down coming into today, even though we had an inside day yesterday, or you could have called it down to balance again. But we are certainly now attempting to come out of it down on the Q's. Russell also, inside day, they are still balanced for the most part. Now look at them. This is a little different here. Russell was a 4 or 5 day balance. Okay? Wednesday put them into balance. Did not go down, right? Markets don't go bull bear. We went bull, balance on Wednesday. Continued balance on Thursday. So if you're trading the righty, for it to go down, not only do you have to take out yesterday's low and Wednesday's low, I think this the 11th low is the important one. Remember, they had that small gap. If you come out of the 11th low to the downside, then you'll be coming out of balance to the downside. Okay? Now remember, they are still pretty healthy, way above May's high for now. All right? Very important things as they're all different. So what is the game plan for this morning? Again, if the gap's $1 or less, I'd probably look for a short against yesterday's low. If the gap fills, we'll see if that's all they want to do. Any acceptance, say, back inside of G's range and back near value low, and everything changes. We were only 8 wide yesterday. G was too close to the day's low to use as an afternoon rally high, so nothing really to lean on there. We would have to see what happens at value low if we were to fill the gap and to push up. Okay? Now, if the gap gets even larger, right? Remember we said yesterday, if we come out of balance to the downside, what are we going to do? We're going to take back the 12th. Well, right now, pre-market, we took back a lot of it, but that doesn't matter to me, right? It has to be done in regular trading hours. So if this gap holds, we should take back at least all the single prints from the 12th, and then we see if we get acceptance into the lower distribution. So if the gap gets too large initially on the opening, maybe you take along the first time against the upper end of the lower distribution. But any acceptance in there, you have to get out. Okay, that would be the only call play for a quick play. In fact, I was looking for it in ES this morning. I had a bid in it, 38.50. That was right below the last single print fill, but it never got there. Got down to 41.25, I believe. And so it would have been a responsive buy. Again, I wouldn't be buying the market because I think it's good. I'd be buying it against a responsive level because we're trading against short-term traders. That's the only long I would even consider for now. Can we get an inventory adjustment? Sure. But if we get one, to me, I'm going to be looking for a short opportunity on that as we get closer, possibly near the gap. All early plays. And then on the chart, just going to show you the daily. So, right, markets don't go bull bear. We went, look at this from here. Look at this progression from this trend line. We went balance. That only put us into balance, that gap, that day. Then we went bull. We went bull, balance, back to bull, balance, back to bull, balance. Now we're attempting to come out of balance to the downside. We're below the trend line for 2 days. We failed at both the 200 and May's high. Now the question is, do we see the 20-day moving average before we even attempt to go near the 200 again? Thanks for the likes and subscribing. Good luck trading today, and we'll recap the day and the week at 4 p.m.